Danny from Wicked Cool Finance here. Before we go any further, please like this video and subscribe to my channel. Now let's get right into it. What is a mutual fund? Let me be absolutely clear. In my view, mutual funds are not investments. When you put money in a mutual fund, you are actually hiring a money manager. Okay? Mutual fund companies are marketing firms that hire money managers to manage your money. Firms like Fidelity, Vanguard, BlackRock, T. Rowe Price, there's many others. These firms simply hire money managers to manage your money. They are marketing firms. Okay, to help you understand this, and this will really help you dig into it, let's look at three specific funds. First, we're going to look at a large cap fund, then we're going to look at a mid cap fund, and then a small cap fund. Hold it! What's that word cap? Market capitalization. What's the market capitalization of a stock? Well, let's keep it simple. The market capitalization is simply this. You take the total number of shares multiplied by the share price, and that gives you the total value of the company. Let's bring it home. Let's talk a real life example. Let's talk about Coca-Cola. Okay, as of the filming of this video, and it's June of 2025, as of the filming of this video, Coca-Cola was trading at about $71.50 a share. And Coca-Cola has 4.3 billion shares outstanding. So if you take $71.50 per share multiplied by 4.3 billion shares, you get $307 billion. So if you wanted to take total control of Coca-Cola and buy all of their shares, the total cost would be $307 billion. That is what Coca-Cola currently is valued at. So large cap firms, large cap stocks tend to be companies, and this is somewhat subjective, but large companies tend to have about $10 to $12 billion or more in market cap, in value. Mid-cap companies tend to have about $2 billion to about $10 to $12 billion. And small cap companies, of course, are going to be about $2 billion or less in value, in market cap. Okay? So let's look at these three mutual funds, and this will truly help you understand why I say mutual funds are not investments. You are hiring a money manager. All right, let's look at the first fund. The first fund is the Vanguard Windsor Fund. The Vanguard Windsor Fund is a pretty good fund in my view. Its ticker symbol, and this will help you when you go to do your own research. The Vanguard Windsor Fund, its ticker is VWNDX. Okay? Now, the 3-year rate of return, hold it, do I care about the 3-year rate of return? I don't care at all about the 3-year rate of return. I should say the 3-year average rate of return. Why don't I care? It's because there's been many 3-year periods where the stock market has just gone crazy, and anybody could do well during those 3-year periods where the market goes nuts, okay? So ignore the 3-year average rate of return. Let's look at the 5-year average rate of return first. The 5-year average rate of return of the Vanguard Windsor Fund is 12.97%. That's pretty good, all right? The 10-year average rate of return is 9.18%. That's pretty good as well. If I could put money in an investment and get nearly 10% for 10 years in a row, I'd be pretty happy with that. Well, the manager of the Vanguard Windsor Fund, and I'm probably going to butcher his name a little bit, so forgive me, but the manager of the Vanguard Windsor Fund is a guy named Richard Pezena, okay? Richard Pezena has been there since 2012, so that's 13 years. So he and his team get full credit for that 5-year average rate of return and that 10-year average rate of return. All right. If the previous person had retired and Richard had only been there for a couple of years, then that return would be pointless, and researching the company would be pointless. Okay. So let's go to the next mutual fund. And that's the T. Rowe Price Mid Cap Growth Fund. All right. Again, ignore the 3-year average rate of return. The 5-year average rate of return on that T. Rowe Price fund is 7.45%. Not bad. Let's look at the 10-year average rate of return of that T. Rowe Price Mid-Cap Fund. The 10-year average rate of return is 9.28%. The manager is a guy named Brian Berghuis. All right, Brian's been there since 1992, nearly 33 years. So again, Brian and his team get full credit for that 5-year average rate of return and that 10-year average rate of return. So again, you're not investing in a mutual fund. What you're doing is in this case, you're hiring Brian Berghuis and his team to be your money manager. Let's look at the third fund. The third fund is the Fidelity Small Cap Growth Fund. Its ticker symbol is FCPGX. By the way, the T. Rowe Price symbol, as you saw in the video there, its ticker symbol was RPMGX. But back to Fidelity, the Fidelity Small Cap Growth Fund. Okay, again, ignore the 3-year rate of return. The 5-year average rate of return for that Fidelity fund as of the filming of this video is 9.95%. Not bad. The 10-year average rate of return of that Fidelity fund is 10.67%. Pretty good. All right. The manager of that Fidelity fund is a guy named Patrick Venanzi. All right. Patrick Venanzi's been there since 2011. So he's been there for 14 years. So Patrick and his team get full credit for that pretty good 5-year average rate of return and that 10-year average rate of return. Again, mutual funds are not investments. In this case, you would be hiring Patrick and his team to manage your money. All right. You too can do this research. You can go to Morningstar.com and put in the ticker symbol under the funds button, and you can check all this stuff out. In the bottom of this video, I put a link to a video that explains how to navigate what is called a mutual fund fact sheet. Okay? Now, if you noticed, I didn't say anything about mutual funds that invest in bonds. I'm not a fan of mutual funds that invest in bonds. In my opinion, mutual funds that invest in bonds are not very good investments. Now, if you want a deeper explanation of that, go to my playlist and look for the Bond for Beginners video, and you'll get a full explanation of why I just said that. Please like this video and subscribe to my channel, and I'll see you on the next one.